Alrighty, here we go, guys. It is your cousin Dustin. There you go. See what I've been doing? I've been doing some crazy stuff. We're going to run through the markets, as we always do. It's 3:31 p.m. It's 3:31 p.m. on February 27th, 2026. It's your cousin Dustin. Like and subscribe if you watch this. So before we get into the markets, guys, let's go over some stuff I'm going to be changing about the channel. Nothing too crazy, about the same pretty much, but I'm just going to change kind of the style of way that I approach these videos a little bit. It'd be kind of dumb to just keep beating my head against the wall, not making any changes. So what I'm going to do is I'm going to pop on, run through the markets real quick, as I always do, and then focus down on three stocks. And then make smaller videos about those three stocks. So as I'm doing that, I'm going to try my best to read off the information of the stocks. We'll go through, say, for example here, we'll go through AMD. I'm not going to do the whole thing because I just went over AMD the other day, but kind of just give an example. So I'm going to go AMD, read the charts, bing, 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 bing. All right, then we'll come down, we'll read the overview of Google Finance, the bullish view, the bearish view. We'll drop down and read the stats next. Now what I'll do is I'll read the charts, then I'll read the stats, then I'll read the views, like the bearish and bullish views. Then we will go into the earnings. Okay. And I'll leave the financials up to anybody who wants to look into them. That's going to just be more, a little too much for one video. It won't help the flow. So we're going to go there. Then we will read an article about the company. All right. So I'm going to do 3 of those each time and then cut them down into smaller sections. My goal is going to be to do them in one fast take so that it's not too difficult to edit. It doesn't take me too much time. They're not, I mean, this shit's not difficult to edit at all, really. Compared to other shit that I've edited before, nothing. It's easy. But you can really, just kind of see on the bottom of the little line that tells where your audio is. As long as you delete the dead zones where you have no audio, sounds pretty good. Give me just a second, I'll be right back. Alrighty. So Okay. That being said, let me pull it up here on my phone. Just in case, you know, just to say that we've done everything we're supposed to be doing. You get it. Everybody gets it. Everybody understands it. Okay. Easy does it. All right. We'll run through the broader markets quickly. The Dow Jones is at 49,480.07. It's up 62. It's up 0.62%. Good grief. If it was up 62%, we'd. Who knows what we would do. The S&P 500 is at 6,947.35. It's up 0.83%. Bitcoin is at $68,875.64 a coin, up 7.49% today. Pretty cool. I like to see that. The Qs. What the heck? What am I looking at? What is this number? What the fuck is going on? Let's go back to the top. Start it all over. Forget about everything I just said. It's all wrong. It's all wrong. I'm a fool. Alright. The Dow Jones is at 48,914.1. Down 1.18%. The S&P 500 is at 6,862.63, down 0.67%. The Qs are at $606.31, down 40.48%. There we go. Bitcoin is down 2.83% today to $65,545.40. Gold is up 1.57% today. Very cool. We love it. To $5,275.50. Yeah, boy. Yes, it is. Silver is at $94.08. Up 7.42% today. Look at that. Mm-hmm. Mm-hmm. So a stock I have some shares of. Honest. Very cool. Yeah, boy, I was buying it when it was low. Hey, what the heck? Why you not let me scroll? There we go. I don't think I want to cover honest like that, though. Why not? Honest is popular. Let's go. Let's do it. So, here we go. Honest Company, sitting at $2.81, up 0.73% today. Over the past 5 days, it's up 24.9%. Look at that. Oh, yeah. Over the past month, it's up 12.41%. Over the past 6 months, it's down 29.39%. Year to date, it's up 8.93%. On a 1-year chart, it's down 43.91%. On a 5-year chart, it's down 85.27%. On a maximum chart, it goes back to May 7th, 2021, and it's down 85.27%. So I guess this company's about 5 years old. Look at their stats. We've got a market cap of $314.36 million. An average volume of 1.92 million. Very thinly traded company. That's going to be important for some of the stuff that we cover here. Hopefully in the article, but maybe in the overview. We'll see. PE ratio of 45.86. So for the type of company that it is, that's pretty freaking high. 52-week high of $5.62. A 52-week low of $2.07. So it's closer to the 52-week low, especially before that big jump. It's got 112.47 million shares outstanding. 164 employees. All right. We'll do the earnings. Good Lord. So, on a normalized EPS estimate, they missed a 68.89% miss, but they were predicted to get 2 cents and they got 1. Ugh. Brutal. That's why this company's down there in the dungeon, under $5 dungeon. Revenue estimate 88.57 million. They got 88.04. So 0.6% miss. Brutal. You can check out the transcript, or the call here, rather. It's 54 minutes long, if you want to listen to that. But that's not what we're going to do right now. So let's check out some perspectives. Okay, sorry about that. Honest Company declined roughly 10% over the past month. Recent volatility stems from mixed Q4 2025 earnings and a cautious 2026 revenue guide following strategic business exits. Analysts project sequential organic growth improvement in the next quarter as the company focuses on higher margin core categories and initiates a share buyback program. A share buyback program for such a thinly traded company. We're squawking. Interesting stuff. Even if it is, a little highly priced for its category. Pretty interesting. Back to the stuff we're looking at here. Strong organic growth guidance. Despite a projected decline in reported revenue due to strategic exits, the company expects 2026 organic revenue to grow between 4 and 6%. This growth is expected to be volume-led and driven by core categories like wipes and personal care. This is the bullish view. Robust balance sheet and buybacks. The company maintains a strong financial position with approximately $90 million in cash and zero debt. Management recently authorized an inaugural 25 million share repurchase program, signaling confidence in the company's long-term valuation and structural transformation. Margin expansion strategy. Transformation initiatives are projected to push adjusted gross margins into the low 40% range by late 2026. This is supported by supply chain efficiencies. including the consolidation into a single automated fulfillment center in Las Vegas. So they have one fulfillment center in Las Vegas. This is the bearish view. Significant reported revenue decline. The company's decision to exit non-core categories is expected to result in a 16% to 18% decline in reported revenue for fiscal year 2026. This transition creates difficult year-over-year comparisons that may weigh on investor sentiment through the first half of the year. Analyst downgrades and target cuts. Multiple analysts have recently lowered price targets or downgraded the stock, citing diminished visibility following the Q4 reset. Recent consensus targets have fallen significantly as the market adjusts to the leaner but smaller revenue base. Macroeconomic and tariff headwinds. Management anticipates continued pressure from increased tariff costs and a challenging diaper market in early 2026. These factors contributed to a substantial Q4 earnings miss and are expected to remain a headwind until at least the second quarter. Guys, remember, this is not financial advice. You got to do your own research. We're just looking at the markets together. All right. So I do find it interesting that Honest gets all these articles written about it. It's a $2, well, getting closer to $3 stock. It's interesting to me that it gets all these articles written about it. It's popular. People have their eye on this little company here. So let's pick an article. There's a bearish article. I want to get one that's not like bullish or bearish necessarily. Will we do two articles? Will we read this one and this one? Is that what we're going to do here? Okay. Let's just read this one. We'll do this one. Honest. HNST. Downgraded to strong sell. Rating by Zacks Research. Written by Market Beat. Strong sell. Jeez. You don't want to hear that. Like I said, full disclosure, I do have some shares of Honest. It's not making or breaking me, but it's kind of a fun company to have. You know, these stocks that are in the dungeon, you never know. I mean, they could rip high pretty easy if something pops off. You know what I mean? I'm feeling pretty good about that little jump it made. You know, or whatever. Back to the article. The Honest Company is undergoing an honestly solid turnaround. Several other analysts have also recently issued reports on the stock. Lake Street Capital cut shares of Honest from a buy rating to a hold rating and set a $3 target price on the stock. In a research note on Thursday, November 16th, Morgan Stanley cut their price target on Honest from $4.25 to $3 and set an equal weight rating for the company in a research note on Wednesday. November 19th, B. Riley Financial restated a buy rating on shares of Honest in a report on Thursday, November 6th. Weiss Ratings reaffirmed a sell D plus rating on shares of Honest in a research note on Thursday, January 22nd. Finally, Telsey Advisory Group reissued a market perform rating and set a $3 price objective on shares of Honest in a research note on Thursday. One research analyst has rated the stock with a buy rating, 3 have issued a hold rating, and 3 have assigned a sell rating to the stock. According to data from MarketBeat.com, the stock currently has an average rating of reduce and an average price target of $3. Hmm. Well, it's looking like it's you know, they've downgraded it. I listened to the earnings call. You have to listen to it for yourself. The Honest Company stock is looking honestly good. This is contradictory. Honest stock up 20.8%. The Honest. Ooh, shit. The Honest Company stock is looking honestly good. HNST opened at $2.79 on Wednesday. The firm has a 50-day moving average price of $2.47 and a 200-day moving average price of $3.09. Honest has a 12-month low of $2.07 and a 12-month high of $5.62. The company has a market capitalization. We just read all this. They're just reading their stats right there. Sorry. I'm not reading that again. So, Honest last released its quarterly earnings data on Wednesday, February 25th. The company reported 0.21 or 21-cent EPS for the quarter, missing the consensus estimate of 0.02 by 0.2. Honest had a positive return on equity of 4.47% and a negative net margin of 4.22%. On average, sell-side analysts expect that Honest will post 0.07 earnings per share for the current fiscal year. Honest declared that its board has initiated a stock buyback plan on Friday, February 20th, that allows the company to buy back $25 million in outstanding shares. This buyback authorization allows the company to repurchase up to 9.9% of its shares through open market purchases. Shares buyback plans are usually a sign that the company's board believes its shares are undervalued. Institutional trading of Honest. A number of institutional investors and hedge funds have recently added to or reduced their stakes in the business. Mac Capital One LLC purchased a new position in Honest during the fourth quarter, valued at $9,104,000. Belaisny Asset Management LP boosted its stake in shares of Honest by 796.2% during the fourth quarter. Belaisny Asset Management now owns 2,006,646 shares of the company's stock, valued at $5,177,000, after purchasing an additional 1,700,000 782,742 shares. In the last quarter, Portland Capital Management, LLC, increased its position in shares of Honest by 11.4% during the third quarter. Portland Capital Management, LLC now owns 6,928,004 shares of the company's stock, valued at $25,495,000, after buying an additional 710,651 shares during the period. Goldman Sachs Group Incorporated increased its position in shares of Honest by 70.3% during the fourth quarter. Goldman Sachs now owns 1,520,331 shares of the company's stock, valued at $3,922,000, after buying an additional 627,537 shares during the period. AG raised its stake by 77%. Hedge funds and other institutional investors own 45.5% of the company's stock. If you listen to the call there, I don't know, it made me feel pretty good about it. I ain't gonna lie. See, there's a lot concerning Honest. There's so many companies have their eye on this little guy. So, Honest News Roundup. Here are the key news stories impacting Honest this week. Board authorized a $25 million share buyback up to 9.9% of shares, which investors often see as management signaling the stock is undervalued and that there will be buy-side support for the float. Telsey Advisory Group reaffirmed a market perform rating with a $3 price target, offering a modest analyst-backed upside view versus current levels. Company released Q4 and full year 2025 results and held an earnings call. The transcript provides management commentary that investors will parse for underlying trends and margin cost dynamics. Multiple outlets published earnings snapshots and call highlights summarizing operational context, useful for gauging whether the beat or miss was driven by one-time items or recurring trends. Q4 EPS missed by 23 cents, reported 21 cents versus I don't get that. And revenue was slightly below consensus at 88.04 million versus 88.57 million. And EPS miss tends to pressure sentiment and valuation multiples. Management updated fiscal year 2026 guidance with revenue of 306 million to 312 million, well below the consensus 340.2 million, which is a significant headwind for forward estimates and likely drove some sell-side caution. Despite the buyback, the company's near-term profitability is under pressure. Negative margins in recent reporting and lowered top-line outlook, meaning sustained upside will depend on execution against guidance and margin recovery. All right. And they've got a little about here. We'll read that. Why not? The Honest Company is an American consumer goods firm specializing in eco-friendly and responsibly formulated products for babies, personal care, beauty, and home cleaning. The company emphasizes transparency in ingredient sourcing and product safety, positioning itself in the premium segment of mass market retail and direct consumer channels. Honest was founded in 2011 by actress Jessica Alba and environmental health advocate Christopher Gavigan, with a mission to offer parents household and baby care items free from harsh chemicals and synthetic fragrances. There you go, guys. So let me know in the comments. What do you think about Honest Company? You think it's going to go up, down, all around? They're going to zero? They're going to be a hero? Let me know. Alright. A little reset. Shh, 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 shh. We're going to do 2 stocks. I thought it would be cool to do 3. We're going to do 2. Because this takes fucking forever to read this. That's what I'm figuring out. I start getting some views, I'll do more, obviously. But, you know, we gotta ease into this. Move our way around it. Is AI gonna put your cousin Dustin out of business? Oh my gosh, is AI gonna start reading the stock market? Who the fuck knows? Who knows, daddy? So silver's at... Here's what we'll really do. We'll do silver as well. That'll give it like I've done 3. You see what I'm saying? Because I'm not going to read this whole fucking thing for silver here. But we will do just the charts. Alright. Silver is sitting at $94.08. Up 7.42% today. Over the past 5 days, it's up 7.3%. Over the past month, it's down 11.21%. Over the past 6 months, it's up 139.95%. Year to date, it's up 33.26%. Over the past year, it's up 193.01%. 5 years, it's up 255.84%. Maximum chart doesn't really make any sense here since they've used silver for like 1,000 years or more to buy stuff. But, you know, on this chart, it goes back to January 27th, 2012, and it's up 178.44% since then. So, that's pretty cool. Very nice. Silver's making a little recovery, I guess. Yeah, boy. Alright, what other stock do we want to check into today? I know a good one. I got a good idea. Coinbase. Coinbase. Alright. Time to get serious. Okay. Okay. Coinbase. Coinbase. Here we go. Coinbase is sitting at $175.85, down 2.88% today. On the past 5 days, it's up 5.8%. Past month, it's down 16.59%. On the past 6 months, it's down 43.09%. Year to date, it's down 22.24%. On a 1-year chart, Coinbase is down 15.61%. On a 5-year chart, it's down 48.58%. Maximum chart goes back to April 16th, 2021, and it is down 48.58% since then. Jeez. Coinbase, Struggle City. All right. Okay, here we go. They got a PE ratio of 40.07, a 52-week high of $444.65, a 52-week low of $139.36, an EPS of $4.39, with 223.04 million shares outstanding and 5,000 employees. What is that noise? It sounds like a freaking helicopter or something. Alien spacecraft is coming through my house. Alright. Coinbase declined recently due to a... here we go, guys. Sorry. Perspectives from across the web. Coinbase declined recently due to a crypto market correction and Q4 2025's earnings miss. Catalysts include the Everything Exchange pivot and falling retail trading volumes. Analysts project a cautious Q1 2026 as the company transitions toward diversified fintech revenue despite ongoing digital asset volatility. Ugh, brutal. What did they think was going to happen? Bullish view. Expansion into Everything Exchange. Yeah, you and everybody else. I don't know. This is kind of become kind of a weird thing. All these stocks are starting to have this, like, I mean, they're not stocks, companies, I mean. Like, you've got, like, Kalshi, Robinhood, Coinbase. You can just trade every single thing on these things. It's like, I don't know if that makes you more valuable, necessarily. I don't know. Seems kind of weird. It's just my opinion. Back to the... Clear my throat. Okay. Back to the bullish view. Coinbase has launched a new service allowing users to trade thousands of US stocks and ETFs alongside cryptocurrencies with zero commission. This strategic pivot aims to reduce reliance on volatile crypto trading fees by integrating traditional assets through partnerships with platforms like Yahoo Finance. Strong subscription and services growth. Subscription and services revenue, including stablecoin interest and staking, now accounts for approximately 40% of total revenue for Q1 2026. The company forecasts this segment to reach between $550 million and $630 million, providing a more stable income stream compared to transaction-based models. Institutional adoption and infrastructure. Institutional adoption remains a core driver, with major players like Fidelity and Goldman Sachs expanding into crypto. Analysts highlight Coinbase's strategic dominance in custody and its base network as foundational infrastructure that positions it as a unique hybrid between a tech giant and a systemic financial institution. Bearish view. Weak Q4 2025 financial performance. The company reported a significant Q4 2025 earnings miss with an EPS of 0.66, falling over 30% below analyst estimates. Quarterly losses reached approximately $667 million, largely driven by unrealized crypto investment losses and a 36.8% year-over-year decline in total transaction revenues. Crypto market volatility and momentum. The broader crypto market has lost roughly $2 trillion in value since late 2025, with Bitcoin falling over 45% from its peak. This correction has severely impacted retail trading interest and prompted several analysts to slash 2026 price targets due to declining trading volumes and market capitalization. Intensifying competition and fee pressure. Analysts at JP Morgan and other firms have flagged growing competition from smaller fragmented crypto players and traditional brokers. This saturation threatens Coinbase's market share and pressures margins as the industry shifts from high margin retail fees to lower margin institutional custody services. So there you have that. There you have that. Check the earnings. On February 12th, 2026, they missed on EPS. They were, Lord, they were predicted to get 0.94. They got negative $2.49. A 364.89% miss. They missed on revenue. They were predicted to get $183 billion. They got $171 billion. Had a weird Asian accent there for just a split moment. A 6.41% miss. You could listen to the call right here. It's about 44 minutes long, if you want to. Wow. Brutal. I don't own Coinbase. Full disclosure, I do not own Coinbase, and I probably will not be. No. Alright, guys, give me 1 second. Alright, Coinbase exec says crypto corrections are simple math, not a catastrophe. Before we get into this, that would be kind of my thinking, is that Bitcoin goes on this long pattern cycle, and like, if you didn't predict that it would go this low and you're like panicking as the like guy of Coinbase, like, bro, what? Like, you didn't research it hard enough. They must have been expecting all this. There's no way that they weren't. If they weren't, then like, bro, what are you like? Like, I'm a dummy in the back room, you know what I mean? The fuck? But they did. Surely they did. You know what I mean? Of course they did. Stupider things have happened. Even in crypto, what goes up must come down. You really just mathematically can't have that explosive upside forever. Coinbase head of institutional strategy, John DiAgostino, told Yahoo Finance's opening bid disclosure Yahoo Finance has a partnership with Disclosure: Yahoo Finance has a partnership with Coinbase. So we got a bullish article here, I guess. He noted that if Bitcoin's growth continued indefinitely at its historical compounding rates, the asset would eventually become larger than the global economy. Bitcoin has seen its price fall over 25% year to date. The digital asset's value now is far below its $125,000 high reached in October of 2025. But these periods of mean reversion, or so-called corrections, are a very natural part of a scarce asset's life cycle, D'Agostino argued. While the narrative of mean reversion implies a long-term cushion, the short-term reality remains bleak. D'Agostino acknowledged that the logic is not comforting to anyone who came in at the top, but he urged nervous investors to look past the price tickers and toward the underlying infrastructure. Bitcoin sitting at $65,581.59. The institutional shift has continued. D'Agostino noted that traditional finance giants like MasterCard and Visa are now using USDC to accelerate payment settlements and introducing the concept of settlement finality. He compared the current financial system to waiting days for an Amazon package to arrive during a snowstorm. In his view, society is no longer willing to tolerate the delays and wants to move toward instant, secure transactions. Once we have the chance to have things done much, much faster, securely, safely, with finality, we will choose to do it that way, D'Agostino said. Despite the institutional optimism, a healthy dose of skepticism remains the safest bet for retail traders. While the infrastructure is undeniably improving and the math of a correction makes sense on paper, the volatility of the scarce asset leaves individual investors exposed to massive swings. Likening crypto to the tech industry, D'Agostino admitted the digital asset ecosystem now needs a catalyst to get out of its sideways trading. The most potent catalyst may be legislative. D'Agostino compared the potential impact of the Clarity Act to the Commodity Futures Modernization Act, which transformed global commodity markets decades ago by establishing a formal market structure. The fuck? Okay. Formal market structure to govern how banks and ecosystem participants behave. The act would provide the legal guardrails for the industry to move beyond its negotiation price. For now, D'Agostino is optimistic a deal will be reached, noting that even an imperfect bill would trigger a massive shift in adoption, one that would, in turn, give the SEC and CFTC a better purview. We want consumers to have the benefit of this technology, he said. I think we're going to get there. Alright, guys, what do you guys think about Coinbase? It's not for me. I'd probably rather just buy Bitcoin. But, you know, some people might like Coinbase. Maybe you like Coinbase. Leave a comment. Leave a comment if you like Coinbase. Or if you hate them. Like and subscribe, guys. Peace. Like and subscribe, guys. Alright. I think that we've done it. I think we've done it.